Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market, in particular on the euro currency. So the Fed statement has happened. We will take the detailed, in-depth view on this statement in our weekly report as usual, since it could make a special meaning for medium-term perspective on the euro currency. But based on the statement that we heard, we could make a couple conclusions. First of all, partially, the investors wish to hear something from Jerome Powell concerning interest rates been satisfied. So because Jerome Powell had touched the topic of the interest rates and that the Fed keeps the finger on the pulse of the overall process, that was some relaxing factor for market and actually has supported the dollar rivals and pushed the dollar a bit lower, holding the immediate rally on interest rates as well. At the same time, we could say that statement that we heard mostly gives just a temporary relief, because Jerome Powell hasn't announced any real measures to control the interest rates and said nothing that Fed is really worrying about the recent rally on interest rates. Mostly the overall sentiment of the statement was sounded like that we see that interest rates are rising, but everything goes according to our plan, and that was foreseen by us, and that we are ready for that, and we do not intend to do something to control it. So it seems that the Fed likes and wants that interest rates climb higher, and it's become a bit more harder situation on interest rates and the inflation. So because he said about the rising inflation, and we would like to see the inflation above the 2% and so on. So it means that the recent reaction on the market and in general things that were announced by the Jerome Powell have the temporal measure. And what time it will be possible to hold the previous tendency, it stands under question. One thing we definitely could say is that current upward action is not the major reversal that was possible, potentially. This is not yet the action to the target of the dollar index. The ultimate target is not the action to the new top of the euro currency. That will be probably some relaxing, relieving pullback after the downside action. So I think that we should treat this overall action currently in this way. Besides, if we'll take a look at interest rates, here you could see the same stuff. So that was the Fed statement. It's almost no reaction, because Jerome Powell absolutely said nothing to hold the upward action on interest rates. Just come down a bit in investors that Fed take into consideration these interest rates. They see that, but they are not intended to take any steps to control, to hold it right now. And that, you can see, leads to fast response of the market. Even today, you can see in the follow time from chart as interest rates are returning right back up. Also, guys, one thing that I am worrying about in relation to the euro currency and the gold market, that on the cryptocurrencies we have the Polish grabber. So recently we already talked about it in our update on the Bitcoin market. And the Bitcoin currently stands in a tight relation to the interest rates. So suggestion that the cryptocurrency will jump to the new top means that interest rates also could go higher. And that in turn means that overall upward action here is also temporal. So it just confirms our suggestion. Meantime, since we have not bad short-term upward impulse, we could think about trying to use it and maybe to consider few targets that market could reach. So on the 4 time frame chart, we're mostly right now dealing with this ABCD pattern. So you can see on the city legs have some acceleration due to the statement of the Fed right here. And first OP target will be 2030. XOP, it's 2133 and almost agrees with the 2150 fib level. So both targets creates agreement resistances with the major fib levels right from the top. This low, 30%, 618%. At the same time, you can see on the daily chart that the market right now also is struggling with the 1990 fib level. It's already tested. Now market is coming back to it again, and it was previous lows as well. So from that standpoint, we could consider current levels that we have here, where you potentially could take the position. You can see the first pullback already has happened here, 30%, 1953. So potentially, if we will get some kind of the ABCD, there's two levels to consider. First one is 1953, next one is 1930 confidence support. Invalidation point of all this construction stands right below these lows, just because this is the C point of the ABCD pattern, and you can see important consolidation where we discussed recently as a potential point where you consider taking the long position if you'd like to go through the Fed statement. So if you have taken position, that's great. You could move stops to the break-even. That's set up mostly for those who follows the conservative approach and now watching for possible pullback where theoretically we could consider taking the position. So currently, these two levels to consider. Mostly, I would say 1930 seems more solid since it's confidence and just it stands closer to the validation point, so it carries less risk in the current situation. So that's actually what we have on euro account, so let's see what will happen. But currently, it would be better to treat overall upper action as a pullback, as a retracement, because this is not, the statement was not as strong as to reverse tendency totally. This was just Fed comments that make a bit overall tension on the market and warning on the market concerning the interest rates a bit smoother. So it's just provide some minor relaxed overall situation. So let's see what the price action we will get within the two sessions till the weekend.